Hello, everyone. Welcome to the Green Effect Podcast, Season 3. Lucky episode 13 is what I'm saying about this one. So, a few things we talk about in this episode, and I'll prepare you. I jump around a little bit. Not literally, but I definitely jump around topics because they're all kind of intertwined a little bit, okay? So, Bank of Canada, all right, they got pulled in front of their usual standing committee meeting to talk about their their report on monetary policy to explain what's going on. So I talk a little bit about that. Rates, where do I think they're going, right? So I actually have my dartboard here, and basically I'm just throwing the darts at the dartboard to tell you my predictions for rates. It's not that scientific, but pretty close. Finally, the banks, they reported their earnings. So let's talk about what that means and some of the little parts that they dropped that we really have to pay attention to. Here we go, episode 13.
Welcome to the Green Effect Podcast. Finance, life, business, and everything in between. And now, your host, Stephen Green.
Hello, everybody. Welcome to Season 3, Episode 13. The Green Effect Podcast is live. So, hope everyone got through. If you're in southwestern Ontario, I hope you got through the snowstorm that we had. What a weird one. Like, we got dumped fast. What was that, 20 centimeters probably? But if anyone tried to shovel that the next day, whoa, that was heavy snow. I'm sure the kids loved it. It was definitely packing snow, but yikers. Thank God I've got a snowblower. That thing worked wonders. It got jammed a couple of times, but hope everybody doesn't have a chiropractor appointment for the rest of the week because of the weight of the snow. Anyway, let's get into what's gone on the last week, because there's been a lot of things that have happened. And of course, we're coming into an interest rate announcement very soon with Bank of Canada and Tiffyboy and friends. So the banks. So banks had their quarterly earnings. And let's just say the markets reacted about how you'd expect the markets to react. So all the banks were the same. Okay, so they all reported increase in profit. They reported that, again, generalizing, that they've met a lot of expectations for investors, not as high as they expected. Okay, so most banks, and I'll just say RBC because I used to work there. I have stock there. RBC stock, I think that day by noon, I think it was down like almost $6 a share, which is not totally normal for bank stocks. So it definitely recovered over the few days after that, but analysts were not crazy about what they saw on the reports from the banks. Now, digging a little bit deeper, listen, if you're telling me that you're shocked that yes, profit was up but not as much, and they announced that the mortgage book has come down a little bit, the balance is less. If you're shocked by that, I'd love to be living under the rock you're living under. So I don't think there's anything surprising here. We know mortgage origination is down. We know people are not proceeding with home financing. Just look at how many listings are out there. So we know all of this. I believe investors or analysts have built this in going forward, but when it's actually announced and the real truth comes out, when they do these reports, that's when it ideally hits the market. So nothing surprising. Now one thing of interest, and again, I'm just picking on RBC because I think it was the second last one that I had read. They also, along with all the other banks, have increased loan loss provisions. Okay, so what that means is they're building in money to pay for potential loan losses, loans, mortgages, lines of credit, etc., down the road. Again, not a shocker, folks. So, in a nutshell, nothing surprising with the banks. We know what's going on. Yeah, their stock took a bit of a hit, but it did recover. In fairness, RBC did recover over a few days after that, but nothing surprising from bank reports at all. They did give warning, right? That actually, I'll talk about Scotia. Scotia basically came out and said, look, we are really looking at our mortgage book and how we approve mortgages and stuff like that. So look for probably tighter rules around mortgages, less exceptions, stuff like that, because at the end of the day, these guys need to make sure they can fund it, they can back it up, and if they want to take on less risk, then they take on less mortgages or less lending in general. So again, nothing surprising from the bank reports. We'll see how this all pans out on the market, though. So having said that, where are rates going to go? Well, I'll tell you a bit of a funny story here. So last Monday, and hey, listen, I'm like a lot of business owners where I post my social media. I do it all at one time and schedule the posts, etc. And so I posted on my social media last week, fixed rates are coming down. Everyone can celebrate. Every realtor I work with reposted it. Steven said fixed rates are coming down. And then the bond prices went up. And of course, rates went with it. So I post, and this is just how fast news and the market is moving. I think I scheduled that post end of the week before. By Monday, it was outdated. All of a sudden, fixed rates have gone up. So anyway, if you're a realtor who reposted it, fantastic. If you're the people who replied to my post and said, are you sure? Are you sure rates are going to go up? Because the kind of the bond yield's a little bit moving over here. Anyway, thank you for everyone who called it out. I know what happened. That's what happened on the timing. So rates, where are they going? Who the hell knows? Like, let's just call this what it is. I posted on social media, rates are probably going to come down. Sure enough, there's been consecutive increases in the fixed rate market due to the bond yield. Remembering, that's where the bank and lenders get their money from that bond market. So fixed rates are on the way up right now. We haven't seen a lot of movement on variable at all. But for now, we're seeing fixed rates increase. When will that end? I'm going to guess everyone's going to wait and see what happens with Bank of Canada. If you are asking me, and I'll get into this in a moment, if you're asking me what will happen, okay, is Tiffyboy and company going to increase the prime lending rate? I'm going to say no. Having said that, has his forward guidance been absolutely atrocious to Canadians? It has. So, as much as I'm saying no, probably not an increase, let's not all fall off our chairs or drive our cars into trees when you hear that possibly the prime rate has gone up, okay? I feel he's got a credibility problem, folks. Let's just call this what it is, okay? And I'm going to talk a moment, Bank of Canada and Tiff and his friends had to complete their report of the Bank of Canada on monetary policy, okay, to their standing committees, the federal government standing committees. And so I'm going to post that link in the bio, or not in the bio, in the description, because if you want to really see what's happening and who's calling bullshit on this, you got to watch this, okay? So I think, okay, they are struggling with credibility. They've been wrong so many times, okay? In that particular video, okay, again, if you're asking me if I think rates are going to go up, again, my answer is no. But if you watch that video as to the questions he was asked by the standing committees, they're calling bullshit. There was one MP, and I'm sorry, I don't have his name right now, but he basically came out and asked Tiff. He's like, look, a couple of years ago, you told everyone, go make big purchases. Rates are going to be low for longer, right? What the hell, man? Right? Do we believe you here? And I am big time paraphrasing this. But talk about a question Tiffyboy and his friends do not want to have asked, right? Like, it's, of all the things to be asked, that's what they don't want. But he basically said, guys, I guess it is what it is. He made a mistake. He came out with a statement that basically impacted the whole damn economy going forward. And he basically said, in response to this question, he said, look, things changed. We pivoted as quickly as we could, which, by the way, I don't think he did. I'm calling bullshit on that one with him. But he said we reacted as best we could. He goes, there was basically things outside of our control we were not expecting. Okay. My comment, don't be a financial advisor. Just report the numbers. Don't tell Canadians to go do this, this, and this. Okay. Many Canadians made decisions on variable rate mortgages. Okay. Because I was given that advice. Hey, go variable. Tiffyboy said we're going to be low for long. So, like, we can't, we gotta be careful who we're getting mad at here, right? When we talk about, and all the banks also reported this, my friends, the banks were reporting on the percentage of mortgages that have hit trigger rates that are variable, so with a static payment, and what that looks like. They are basically now at this point almost interest only. So some banks were reporting as high as 20-25% of their mortgage book is pretty much now interest only payments. So, when we're talking about TIF and credibility, I think he can't raise rates. If he raises rates after saying he wasn't going to, and I know there was an asterisk there, well, if something happens I'm not expecting, then you know what? Just shut up. Stop. You're clearly not very good at predictions. So keep it a little more vanilla, okay? Report the numbers and give vague guidance so at least people like myself, as a mortgage agent professional, giving advice to their clients can at least give some confident advice. Because right now, we're all making it up as we go, right? We're taking the data we have and that's it. We're going very risk adverse when we're talking about the data we're using to give our recommendations. Okay, I'm confident in the recommendations I'm making, but everything at the end is assuming this, and this doesn't happen, right? So, the report that they gave, I like that politicians are starting to call bullshit on this guy. Now, my concern is, and please, you know what? If you want to watch the video, I know it's not that long. It's probably okay. It's a couple of hours, but if you really want to see what's going on, it's a great video. The one thing I don't like is it started to get a little political. Okay, let's ask the questions. Like the one question from the one MP I was talking about, basically saying, "Hey, why should we believe you?" Okay, that's good. I like that. That's direct to Bank of Canada. But then some comments started to come out around, well, Justin Trudeau did this. Why did you do this? It started to creep into political rhetoric, which is not cool. Okay, so have a look at that video, honestly. Even if you just listen to it, like in your car, it's a fantastic video to really understand what's going on with Bank of Canada when they're giving these reports. So the other thing to mention, and sorry if I'm jumping around, some of this stuff is so intertwined. The other thing to mention as well is when these mortgages come up for renewal, these static payment variable rate mortgages, we are doing a ton of planning with clients to make sure they understand that with a static variable, your amortization at damn near interest only is probably going to be pushing somewhere between 60 and 80 years. So when you come at renewal time, the lender is going to want to bring that amortization back down to the original amortization. So be prepared. Your payments are going to go up. And we're doing planning with clients on this. Have some money saved. Make sure you've got enough for the payment. Just planning. So if you're working with a mortgage broker, agent, professional, whatever, and they're not planning your stuff years down the road, you got to consider who you're using. Okay, the days of one trick pony, wham bam, thank you ma'am, you're out, here's your mortgage, God bless you, those days are gone. Okay, your mortgage person has to plan for you. This is very, very important. Okay, my friends, that is it for today. If you have any questions, I welcome them in the comments. Love reading those things. Sometimes I've got a response, sometimes I don't, but I'd love to hear it. And hey, shameless plug, make sure you visit our website, okay? And here's a kind of a cool marketing thing we did. So I'd love to share this with you. So we have a lot of real estate agents that listen to the podcast, a lot of clients who are very entrepreneurial. I totally went onto GoDaddy and I bought and paid for cool domain names. Okay. It's getting a little bit long in the tooth, me trying to give some of my email address or my website. And it's www.thefinancialcollective.ca. And I always make a joke. It's like, I couldn't find a longer one, so I took that one. Anyway, if you do want to visit our website, love to have you visit it. I'm the proud owner of lendmemoney.ca. So if you go to lendmemoney.ca, it will actually direct right to our website, which is a lot easier to say than thefinancialcollective.ca. Okay, so try it out for me. Let me know if it's not working. It's kind of new. The other thing I did as well, again, I'm going off onto a tangent, but it's my podcast, so too bad. The other thing I did is I took my phone number and I registered that domain. I actually did that years ago, but now I have a use for it. So when someone's like, hey, do you have your business card or whatever? All they got to do is go to 519-500-1789.com and my whole link tree comes up with everything. My contact card, you can download the whole bit. So my ask of all of you, after you give me your 5-star review and the amazing review, okay, can you try out these links? Tell me if they're working. If they're not, let me know so I can fix them. All right, that's enough for today. I got stuff to do. Questions, let me know. Love to hear from you. And other than that, talk to you soon.
Thank you for listening to the Green Effect Podcast. Subscribe to this podcast on iTunes or Google Play so you catch the next episode. And don't forget to leave a review. Much appreciated.